It's about that time of day again. My name is Joseph. It's Wednesday evening, September 6th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Crude is bullish with a spike in range ahead of the weekly inventory report, which tells us to look for buying opportunities using those seller failures back below the range tomorrow. The S&P is bullish, but an almost horizontal, flat, wide channel is telling us to use a range strategy in tomorrow's session. Nasdaq is bullish with a V-bottom pattern, and the specific location of this pattern is telling us to avoid buying now and wait for price to pull back into the battle zone for much more reliable buying opportunities tomorrow. Gold is range bound and trading at the low of the trading range. Yep, same range from last night's newsletter, which tells us to use the two-try rule to buy seller failures back into the range high tomorrow. And of course, the euro is also range bound, same range from last night. And after the bulls tried and failed twice today, we're looking for selling opportunities back to fill the gap tomorrow. But I got a great newsletter in store for you guys and gals tonight. We get some big opportunities setting up tomorrow. We'll take a look at the calendar in a moment. We'll grab those charts. And tonight we're going to talk about that important topic of gauging strength by looking for flat, horizontal, wide channels and comparing them to more vertical, right? More stronger trends, right? With stronger channels. Stay tuned for more of that as we dig into tonight's newsletter. Before I jump in and talk about all the details tonight, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link. Come join me here on the blog at Sideways Markets and watch the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this nightly newsletter goes live. Follow me on social. StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite social channel of choice. Follow me throughout the week for charts, links, and updates. Don't forget, speaking of charts, don't forget about those charts. Tonight's video, how easy is that? Follow that link below the video on the blog at Sideways Markets, right? And grab those charts, all the charts from tonight's video, and you can have them ready on your computer for tomorrow. And don't forget, if you do one thing besides watch this video tonight, make sure you grab that free pass in the upper right-hand corner. What are you waiting for? Come out and join me this week or next week as a guest in our trade room and see what everyone's talking about. Don't forget, if you guys have any questions here, hit me up on live support on the right-hand side of the website. Boy, big movement here today. We got a lot of spikes, a lot of ranges, and we're going to dig in and talk about those flat channels in just a moment. Before we jump in, though, I do want to remind you, tomorrow is Thursday, September the 7th. Boy, we're flying right through this holiday shortened week. And, of course, as we mentioned earlier on this week, Monday the 4th was the Labor Day holiday, right? The official end of the summertime season. And this week, we are transitioning into the fall season. A very big transition because now we go into that months of September, October, November, December, January, February, and the third week of March. This is the sweet spot when it comes to professional trading, right? Short-term day trading strategies. So we're definitely amped up here at School of Trade headquarters in Los Angeles. Now, with that Monday holiday, that means most of the news is now been pushed back, right, from Tuesday and Wednesday into Thursday. So tomorrow is kind of a catch-up day, right? Not mustard catch-up, right? Catch-up day, right? We're playing catch-up. All the stuff that got pushed forward usually gets crammed into, right, that Thursday session. They don't have to put on a Friday or Tuesday or Wednesday. It usually gets crammed into that Thursday session. So everything that got postponed from the Monday holiday is now kind of jammed into tomorrow, Thursday, September the 7th. As you can see here, we got a peppering tomorrow in London, 3:30 a.m., 5 o'clock, and of course we got the ECB announcement tomorrow at 7:45. If you're watching gold, if you're watching euro, those are going to be markets you really want to keep your eyes on tomorrow for the ECB announcement. Don't forget, the ECB announcement is just like the FOMC announcement. You'll hear the announcement at 7:45, and then for the next hour or so, right, my boy Draghi will give you a press conference. That's where things start really getting interesting. So really, that 7:45 announcement really should be seen as 7:45 until about maybe 9 o'clock, 9:30, right? Once all that live Q&A is all out in the open there. Then, of course, tomorrow morning, we jump into the U.S. morning session. We got jobless claims at 8:30. productivity and costs at 8:30 a.m. Eastern time. Then we go all the way down to the petroleum status report here, right at 11 o'clock Eastern time. Not a lot of news in the U.S. session tomorrow. We get jobless claims and productivity numbers at 8:30. I'm not expecting that to be much of a market-moving event. In all reality, I'm expecting there to be a lot of eyeballs on the hurricanes, right, hitting South Florida tomorrow, as we've seen. That's really dominated the news headlines today. So we'll probably see more of that tomorrow. I'm not expecting that 8:30 news to have much of an impact. What I am expecting, though, is that 11 o'clock news to have a very big impact on markets such as crude oil. Anytime we have the weekly inventory report, usually it's on Wednesdays, right? And usually on Wednesdays at 10:30. Monday was a holiday. It gets pushed back to 11 o'clock on Thursdays. You can pretty much set your watch to that, guys and gals, right? Anytime we have a Monday holiday, that Wednesday weekly inventory report gets pushed back to Thursday at 11 o'clock. I say this every time we have this situation. I actually like it better like this. I wish they would leave it at 11 o'clock on Thursdays. That way we don't have to worry about, right, getting out too early in the day. Most important things you want to be aware of if you're trading crude oil tomorrow is early in, early out. Early in, early out. Normally on Wednesdays, the cutoff is 10 o'clock. On Thursday morning tomorrow, the cutoff tomorrow is going to be right around 10:30. Okay, doesn't mean exactly at 10:30, but we'll be watching price action, watching the personalities, see how things start moving. It may die off as early as 10:15. It may keep plugging away until we get closer and closer to 11 o'clock Eastern time. Your sweet spot, though, tomorrow morning, and this is really every morning on crude oil, is get to them early, get to before 10:30 tomorrow, and then sit on hands, cover positions, protect yourself, because Hurricane DOE, right, is going to come out tomorrow and whip this thing around. Remember, big volatility around that weekly inventory report. So get to it early, get out from behind that news report, and then we'll see how much we get after that news comes out. It's 11 o'clock. Much like the gold market or the euro market, crude is an early morning market. We're not talking about the S&P here or the Nasdaq, which will trade all day long. Crude is really an early morning market, not as bad as gold and euro, but after 11 o'clock, we're going to be keeping our eyes open and see how the personality looks after that 5-10 minutes go, right after that news comes out tomorrow. So get to it early before 10:30, watch after 11 o'clock. We'll see if we get much personality afterwards. We'll really have to wait and see what we get. One more thing, then I promise I'm going to jump into charts. One more thing here. The last thing for tomorrow's crude inventory number at 11 o'clock is we have our support and resistance levels for tomorrow. All right, I sent those out on all my social media channels a few hours ago. We had those out on our channels a few hours ago. If you didn't grab them on Facebook, Twitter, or StockTwits, if you're not part of the community here at School of Trade, I'm going to post those for you guys right now. They're available below the video tonight on the blog. Just scroll down where it says click here to read more. You can see the whole text for tonight's newsletter. You can find the support and resistance levels, right, we'll be using for tomorrow. So get at it early, watch those support resistance levels we're going to talk about in a moment, right? And again, Roy, who knows, right? Who knows? Big news tomorrow morning, right? Hurricane inventory is coming out tomorrow morning at 11 o'clock, and we always know anything can happen around major news. So get to it early, get out of there early, right? Batten down the hatches around the news report tomorrow morning, right? And we're going to have a fantastic Thursday session in our trade room, which opens up at 8 o'clock Eastern time. Let's jump right in. We got a lot to cover tonight. We got crude oil, S&P, Nasdaq, gold, and we'll wrap it up on the mighty euro. Crude is bullish with a spike in range ahead of tomorrow's weekly inventory report, which tells us that although anything is possible, our goal is to use the bullish bias to look for seller failure below the range for buying opportunities going back up to retest the high. The biggest challenge for tomorrow is this darn inventory report, which reminds us to get to our trades before 10:30 a.m. tomorrow, right? Get to those trades before 10:30 a.m. And oftentimes the weekly inventory report will completely reverse the weekly trend just to set things up on the opposite side as the week finishes. So really anything is possible here for tomorrow. As of right now, though, the bulls have control. We're looking for seller failures and buying opportunities tomorrow, but don't be surprised if this thing starts going crazy tomorrow ahead of inventory report. So keep your eyes and your mind open to whatever this market throws your way tomorrow. Most important thing right now, and of course you can see there's those inventory levels I talked about. You can write those down right now. Those are the support and resistance levels for Thursday. It's only good for Thursday's session. You'll notice those levels will act as support and resistance all the way to the end of the week, but the most potent use of those are in the day tomorrow on Thursday. I think the most important thing right now, though, is strong move up, and we're going sideways. We're unable to sustain anything going higher, unable to sustain anything going lower, right? This is a spike and range. Now, when it comes to a spike and range, and again, we're going to talk more about channels and those flat channels on the S&P. We'll talk about the channel in a moment. Most important thing here, though, on this chart is this spike in range. There is a bull bias, a strong move up, which tells us we want to be a buyer. Now, there are ultimately two ways I'm going to buy this market. First and most reliable is the 2-try rule below the low of that range. I'd love to see it down inside the battle zone, right? Battle zone, of course, being some prior swings that will really sweeten the deal for those buyers. They get a nice deep pullback. The key is whenever we have a trading range, I'm focusing on failures. So as we break down, I'm looking for the sellers to try twice. Once I see those bears try once, try twice, then I know I can now start looking for that seller failure, and we start watching this market run back up to retest the high, right? Targets go back to the high of that range, and then don't forget, right, that runner will go all the way, right, to the opposite side for that pendulum swing, right, back and forth. The next option here, a little bit more challenging, is now where we go higher. Now, it all depends on how the market looks as it goes higher. For example, you'll notice earlier this morning, we broke above the top of the range, but look at the moving average. See how that moving average doesn't clear outside that range? That's a good clue. It's probably not going to keep going. What I'd like to do is see a strong break higher. How strong? Strong enough to get that moving average up. Then, very important, I look for a trap low, two-legged pullback, trap low, and a buying opportunity from there. Now, this is where it's really, really important. This is a trading range. You can rely on that first buying opportunity as long as you get that strong move up, moving average above, two-legged trap low. Very specific pattern for a very specific range-bound scenario. But be aware, this now also sets up for a 1-try, 2-try, and if the buyers can't hold it, it will collapse back down in. The moral of the story is you've got to buy low, right? Do not try buying as the market goes higher because you're playing right into the trap, right, that of course happens at the low and the high of a trading range. Just like I said earlier, I want a 1-try, 2-try to buy. There are also going to be sellers up here that want to go 1-try, 2-try to sell. So the key is do not try to buy that break higher, right? You might get lucky every once in a while buying breakouts, but breakouts are unsuccessful most of the time. These are liquid markets we're talking about. This ain't no Bitcoin, right? This isn't penny stocks. Liquid markets do not, they don't break out easily because there's too much efficiency. There's a buyer for every seller. The best way to trade a breakout is to fade that breakout. Look for those range breakout failures, right? So 2-try rule, again, get me down in the battle zone. That will be great. Up one, strong, trap low. Make sure you buy nice and low and be very, very careful, right, chasing that move higher tomorrow. Now, speaking of the move going higher, as we transition into the next chart on the S&P, right, the S&P has a nice flat channel. I want to make a point right now to point out, right, that this channel is a nice, healthy, rising support trend line. It's an unconfirmed, right, unqualified channel, but I want to point out the strength of this channel going higher. Here's a good way to do it. Take out a drawing tool or a ruler, right, and just draw a line from the lower left-hand corner up to the upper right-hand corner, right? Now, I didn't really pay attention very much when I was a kid in geometry class, right? But that is a 45-degree angle, right? 45-degree angle, right? 90-degree angle, we know this, right? 90-degree angle goes across, right? A 45-degree angle slices it right down the middle. This is the goal. The goal is to get my channel, right, to be at least a 45-degree angle, right? So if I see a channel that is flat, okay, that is not a very good looking channel. We're going to talk about that in just a moment. What I want to point out though on this is, is that if you draw that line across, right, you can see we're not quite there. You'll notice it's not quite 45 degrees, which is because of that range. But this is a really good comparison we're going to see on the next chart. Speaking real quick, wrapping up on this channel, right, we have that bull channel, and that will be your target, right? Targets now for those bulls. Again, right, our strategies here at School of Trade. So buy low, sell high on those ranges, use the 2-try rule, and don't forget about those flat channels. Right, those flat channels, what was it again? Less than 45-degree angle. Those flat channels, you want to trade them like ranges. Buying low, selling high, 2-try rule, focusing on failures. Boy, oh boy, I have covered a ton tonight. I realize there's a lot to cover every night on the newsletter. And if you're brand new to the great business of day trading, I really welcome you to our community here at School of Trade. I look forward to working with you more as a client. I would encourage you, though, if you're brand new to trading, you're going to love our free trial, or maybe you're not new to trading, but maybe you're trying to find a strategy that actually works in today's crazy markets. You'll notice I don't use a lot of indicators. Right? In today's markets, indicators are gonna bleed you dry with false signals. And once you get some false signals on those momentum indicators, right, all of a sudden you start cherry picking, and you usually pick those rotten cherries. If you want to learn more, change the trajectory of your trading career, check out that free trial. I think with the best free trial in the business. You can find a link for that free trial in the description of that YouTube video. While you're here, don't forget we got beginner, intermediate, and advanced classes. We have some great flexible enrollment options right now for our advanced membership, so definitely reach out and ask for more information. Hit me up on live support, call the office, send me an email. All the information is right there in front of you, right on the video here on the homepage. And that'll do it here for me tonight. Careful tomorrow on crude oil, right? Inventory day tomorrow on crude. Get out of there early. And if you are being affected right now by this crazy Irma, right, I wish you the very best. My thoughts and prayers with everyone who continues to be affected by Harvey last week. And boy, oh boy, what a crazy hurricane season it's set up to be so far. If you're affected by this, my heart and prayer goes out to you here tonight. I'll be with you guys tomorrow. Same time, same place tomorrow morning, 8 o'clock Eastern time. If I don't see you guys tomorrow, I'll be back and we'll do it again tomorrow night on our nightly newsletter. My name is Joseph. Thanks for being here. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.